in sellers that are being active today or putting properties on the market, what is like the common thread there that you're seeing, or what's getting them to move?
Depends on their motivation. I'd say the biggest motivating factors for someone wanting to sell, their real estate asset, we call it the 3Ds: death, debt, and divorce. And you could also throw in like partnership disputes, and there's others, right? I'd say that's more of a cliche boilerplate statement, but what drives someone to sell their real estate asset? Back in 2021, 2022, people would sell because they could get pricing they would never have gotten in, a different decade. Or
With the low interest rates, buyers will pay more.
Right.
Drove things up. Yep.
and that fueled a lot of the high transaction volume and the lower cap rates and the higher pricing. But compare that to today, that's not on the table anymore. And so it's back to the fundamentals and primary motivations for what motivates sellers. Maybe there's a loan coming due in the next 6 to 12 months. Maybe there's been a death in the family. Maybe someone's inherited a property that they don't want to own and manage. Maybe there's a partnership dispute, someone wants out. Those are the primary driving factors behind what incentivizes people to sell, because we're not in the same climate that we were a few years ago, where anyone could go out and get top dollar for their deal because rates were half as what they are today.
Right.
So what do you think right now, how far apart are buyers and sellers? A year ago we were talking, there's a big spread between buyers and sellers on pricing. Where is that standing
There's
now?
still we call it the bid-ask spread. It's still somewhat wide. It's definitely not as wide as it was a year ago. And I think, like I said, we're still getting more and more removed from peak COVID pricing. People still try to hold on to those sales comps that they heard about, or those price comps that they saw, 3 or 4 years ago that aren't relevant in today's climate. But the more removed we get from the crazy market, from 2022, 2023, the less relevant and applicable those comps are, and the less impact they have on a seller's expectation versus the reality of where a buyer can realistically make a deal work, and ultimately between those two parties make a deal happen.
Yeah. You think transaction volume is a matter of just time, letting some, transaction volume taken up, meaning just give it more time, get people further down on their debt and see where they're at then, or operations start getting harder, occupancy starts going from 96% on average down to 92%? Is that, you think that's going to be a motivating factor down the road?
Yes and no. I think, in the markets we focus on, in the Midwest, we've typically always had pretty stable occupancy. We've always had fairly stable and consistent rent growth. I don't think that if you compared, some of these markets throughout the Midwest to some of the coastal markets, like we refer them to as very fluctuating. We roll with the punches. We've got good underlying fundamentals. We don't have a ton of development activity compared to some of these other coastal markets. So supply and demand, right? The lack of new supply coming online in multifamily will lead to more rent growth in the existing and older multifamily. So I don't think that we'll ever see a breakdown or change in the fundamental nature of, Class C multifamily in Midwestern markets that the three of us know so well. I think it's more of a macro trend and what we see, nationwide, politically speaking, economically speaking, over the next couple of years that will determine whether or not volume kicks back up and pricing changes,
Sure.
for better or for worse.
So as a broker and what you're seeing today, do you still think, what would you, and this is a tough question broadly speaking, what do you think is a pretty realistic and conservative number to put in line for rent growth? It's
Year over year,
Yeah.
I would say anywhere from 3 to 5%, I think, on the conservative side. you know, depending on your investor, you know, owner profile, depending on your business plan, it could be a little bit higher, between 5 and 10%. You know, if you're doing more improvements to the units, if you expect more turnover, probably in the single digits. And I think, again, it's market dependent, it's product dependent,
Yep.
but